Good day, everyone. We start in 9 minutes. I'm just checking sound in advance, just in case we have a problem, like we sometimes do. So I'm listening on the other computer. If that's okay, then we'll carry on. Good day, Steve. All right, we'll start shortly. Actually, this microphone's a little bit too loud. Let's turn this down a wee bit. Okay, I think that's a bit better. So good day, Steve, and good day, James. Forgive the camera. There seems to be an interference with the camera and the wireless connection with Apple, even though they're all Apple things. We'll start in a minute's time. And again, just to chat, folks, I don't think there are many people here just yet. We're starting shortly. It's a little tricky time because it's sort of early in the morning in New York, prior to early in the morning in the mid-US, and across on the West Coast, it's, well, I think it's still pretty much the middle of the night, or getting, well, it's sort of approaching morning. Anyway, let's go on to the charts and have a look at what we've got. Welcome to this live stream, everyone. I'm going to give away a few memberships right now, just to get going. In fact, I'm not going to do that right now. If you're not subscribed to this channel, you should do that. In about 5 minutes or 10 minutes, I'll give away another 5 free memberships. And if you're subscribed, you'll be automatically allocated one of those if you're lucky. Let's go and have a look at the charts. Please put your questions up in the chat as well, if you've got any. And let's get going. We'll start with currencies and then we'll work across. Excuse me for a second, I just need to get a juice because my voice is getting a little hoarse. We're all family here, so don't worry about the wandering around. I know it's not very professional, but I am here. And I'm not trying to put on a show. We're busy trading the markets. All right, so let's have a look at currencies. Big move down in the dollar yen, and this is the one I want to focus on. I've just taken some profit on this trade, and the reason for this is twofold, really. Let's have a look at this day chart. One is that we've sort of approaching this consolidation area. It's a bit messy. We're a little bit oversold in the short term. It's been a big move down from 162 to 156, a massive move down, actually, very similar to this previous one. And also there was Bank of Japan intervention at the top of this channel. We had a look at this in the last live stream. Not only was this the top of the channel, but it was also the Fibonacci extension level, the 1.618 or the 0.786, however you define that yourself. So we turned there, and that's where the Bank of Japan, interestingly, Japanese candlesticks and Fibonacci's all seem to align with the Bank of Japan, and we got this big move down. And we're now in profit on this trade after a very, very long time. But I've taken some profit on this, and I'll tell you why. If we look at the euro yen, we're also short on this one. And on the euro yen, we've reached the channel bottom. We've talked about this channel many times. Now, you might ask, why am I looking at the euro yen when we're talking about the dollar yen? Good morning, this too shall pass, and Peanuts on the beach having a walk with some children, friends of his. So we've talked about this euro yen and we've talked about the dollar yen. And the question is, why am I looking at the euro yen when we're talking about the dollar yen? Well, we're short on both of these. And on the euro yen, we've reached the bottom of this very, very long-term channel. This channel goes back all the way to December last year on the euro yen. So it's half a year's worth of a channel, which is really, really long and enduring. I'm sure we're going to get a channel break fairly soon, but we'll probably get a little bounce off here, maybe just back up to the 20-period moving average. Take a note on your own charts if you're trading this, where the 20 MA is, 20 SMA on the euro yen, and on the dollar yen, on the day chart, same thing. There's the 20 SMA way above us, the green line, at 160. We're currently at 157 or 156.50. There's a possibility we could retrace all the way back up there. I hope not, but we could. So we've taken some profit, we're holding the rest, and I'll be looking to resell on rallies. If we look at the 4-hour chart on both of these, and you want to sort of zoom into a closer look on this and trade on the shorter term time frame charts, this green line is the 20-period SMA on the 4-hour chart on the dollar yen. There's the channel center line, this dotted line that we've now broken down beneath, that line there, this dotted line. And I think we could potentially get a pullback to that area. I don't know. But look at where the 20-period SMA is and the channel center line, and that creates a good resistance zone up around about 158. Call it 158.10, 158.20, maybe 159, 157.80 or 157.90, somewhere around there. And then also looking at the euro yen on the 4-hour chart, we looked at these on the day chart earlier. Here's that channel that we talked about, that very long 6-month long channel on the euro yen, which we've just touched and formed a sort of a tweezer bottom on this 4-hour. And we're below the 20-period moving average. But look where the 200-period moving average, look where the 20 is, right up here at 172, the 100's up here. And we've got this sort of, well, it's not a trend line. This is the line that I drew from the top, if you remember, a few days ago. Now, we've accelerated rather more rapidly than I expected we would, but that's the general angle. If you follow the angle of the slope up and the angle of the slope down, that's the sort of angle that we should sort of hope to achieve. There's a much longer term channel line down here, which is also important. That's why I'm aiming for there. There's also an order block. That's in the 170 region. Now, considering that's the sort of angle that we're going to need to follow on this, if unless it sort of really collapses through the floor here. But in general, a sensible angle would be this sort of angle, which means we probably need to retrace and consolidate sideways for at least a while, and maybe just sort of within this channel line underneath here, up until we go across to the channel. We'll either bounce up to it and reject from it, or we'll just move sideways. And as we move sideways, the channel will move down. And eventually the price should move down and follow the channel. So that's where we are. Really good news on the dollar yen, euro yen. We're short on both of those. We've taken some profit on the dollar yen, and I'm very happy with that overall. If you've got questions on that, please ask me. Now, going across to stocks, a couple of things here. As you know from yesterday's live stream, or was it the day before? I can't remember now. We're short on NASDAQ. We're short on S&P. We're not short on Apple. I want to talk about Apple right now. We're short on Tesla. We're now short on IWM. That's a trade we took yesterday, right at the top here. We'll talk about that shortly. And we're also short on NVIDIA. NVIDIA is now gapped down in pre-market to 121-ish, 121.5. We're currently at 126.5. So we've already had a $5 gap down on NVIDIA, which is about 2 or 3%, a big move down in pre-market. Hopefully it'll hold down there. We're short from the top, this swing high, and we're also short from there. So we've got 2 positions on NVIDIA short. That one's not in profit yet. This one's quite handily in profit from around 135 or 136. We're already $10, well, $15 in profit now in pre-market. So we're short on all of these. Targets for NASDAQ, bottom of the channel to start with. Same with all of them really. The bottom of this internal red channel, then the bottom of this green longer term channel, then the 200-period moving average, and perhaps we can eventually get that 15% drop that I talked about quite some time ago when we were trading within this channel. We did break out of that channel, but we managed to get up a little higher, reached up to the top here where we've turned around at 20,800, just below that. And if we get a 15% drop, actually that would be more like 20% now because we've moved up a little higher than where I projected that from. But could we get down there? Quite possibly, and that could be at around 17,000, something like that on NASDAQ. Let's see how we go. There's a lot of talk in the market of a lot of people looking bearish at the moment all of a sudden, particularly after the debates that we've seen, the politics going on in the US, the attempted assassination of Donald Trump, various comments by the Fed about interest rates. We've seen a little uptick in retail sales, but we've seen housing dropping off. We've seen the jobs numbers dropping off. We've seen unemployment increasing, and a general feeling that the markets need some correction. And that might actually include gold and Bitcoin too. We'll cover that shortly. But we're short on sort of NASDAQ, S&P, NVIDIA, Tesla, and IWM now. I'm not going to cover NASDAQ and S&P and NVIDIA unless someone asks me in the comments. Please do that if you want to. But I do want to cover, hang on, let me just check that everything's working. I always get a little panicky when I'm not sure if it's working. So, but what I do want to cover, good day, Can. Nice to have you here. is Apple. Let's start with Apple, then we'll go to Tesla and IWM, and then we'll go across to the others. So Apple, what I pointed out in the live stream yesterday, if you remember, I said we might get an island reversal here. An island reversal is formed by a gap up, a number of candles at the top of the island, forming the island, an isolated island, then a gap down, and then a continuation of the move down. That's exactly what we have right here on Apple at the moment. We've got two candles, two potentially reversal candles, a full stop and a tiny star doji at the top of this blob, in the blob, and that's formed the island. We've now gapped down in pre-market down to 230. That's at 234. We're now at 230 in pre-market, and if we open at 230, there's every case for or every argument for a move down. We may get a little retracement just to close that gap, which would mean a pullback maybe to 233, 232, 234 even, probably 232 or 233, and then a continuation of this move down if it confirms and carries on down. It doesn't mean that this will carry on down. We need to wait for this day and this week actually to close out before we can find out what's happening. Remember, earnings on Apple are coming up soon on the 1st of August. Yeah, so keep that in mind. So a couple of weeks from now, earnings on Apple. Be interesting to see. I'm not sure what the projections are. I haven't even looked yet, but we'll get to that at some point and have a look at what's projected and what's thought where Apple will go. Now let's look at IWM. If you don't know what IWM is, go and check that out. What's interesting about this is we had this massive surge. We've got these marching candles, 3 marching upward candles, a little bit of a hesitation candle in between. This is called 3 white soldiers. Normally, this signifies after the 3rd candle, we're looking for an exhaustion candle and for a move downwards after this, or at least just a correction. I'm not saying that this is going to move down. These small caps seem to be in vogue. Interest rate cuts will help small caps, but we have gone too far too quickly, and we've got loads of gaps that we need to fill. So could we get a pullback all the way back down to 210, 211, or perhaps even down to about 208 or 209? Quite possibly. Also notice that we're at the top Bollinger Band. I don't often have Bollinger Bands on my charts. This is the 2.5 Bollinger Band, which means the standard deviation setting is 2.5. The normal standard deviation setting for the Bollinger Band is 2. Within the 2.5 standard deviation range, 99.4% of the time, the data, or in this case, the price, will remain within that range. You can see how often it's done it before in the past. When we've reached the top Bollinger Band, we've turned down. When we've reached the bottom Bollinger Band, we've turned up. We don't often reach this Bollinger Band except for in extreme circumstances. You also get false signals, like there we went through the Bollinger Band and carried on up. Here, we touched the Bollinger Band and carried on up. On these occasions, we went right through it and then bounced back eventually. In a trending market with a decent sort of structure and range, we'll normally trade from Bollinger to Bollinger. In this case, we're near the top Bollinger Band, but we don't have a reversal candle just yet. We have sold though. We sold at the top yesterday, and we're looking for this to move down and at least fill some of these gaps. I think with the interest rate cuts that are probably going to come up in September, even though Donald Trump has requested or demanded or commanded, I don't know which one, Jerome Powell, not to change the interest rates until after the elections. The US federal government doesn't have, was not supposed to have any influence over the decisions by the Federal Reserve and the Federal Open Market Committee. But we all know that politics aren't as simple as that. And we all know it's all about the economy, stupid, as they say. So any shenanigans and fiddling in the economic markets would not be surprising at all. So, however, I think we'll probably still see rate cuts this year, and that will spurn on a rally in the small cap stocks. IWM is what you can trade for this and various other instruments. But I'm looking for a pullback down to at least to fill this first gap, maybe the second gap, maybe the third gap, and then a continuation of this move up. Once we see interest rate cuts take place, and then maybe a month or two after that, I'd expect the broader market to start to move down more seriously. So that's IWM, 3 marching soldiers, 3 white candles, looking for a reversal candle at the top 2.5 Bollinger, looking for that to turn around. Now, Apple, we've talked about that island reversal, and the other one is Tesla. and we're short on Tesla after this messy reversal candle here. We went short at that red arrow. We're still short. We have not changed this position. So we're, I don't know, I suppose a couple of dollars in profit right now, $5 or $6 or $7 in profit. And it is a little bit lower in pre-market. Getting quite messy here. I'm overall bullish on Tesla. I'm looking for these sorts of paths for a pullback. This is a risky counter trend trade in my opinion. And I'm looking to buy Tesla down into these levels, perhaps down into 210, 212, 208, 202, and perhaps even 197, 198, somewhere around there. I like the 8s and the 2s, so I don't like the round numbers so much. So I don't actually trade off the round numbers. I prefer to trade off the 80s and the 20s. All right, let's go to Bitcoin. We've just taken some profit. Half of our Bitcoin we took off at 65,500. We're now at 64.8. I'm still looking to buy dips. I'd like to reload down into perhaps, I don't know, if we could get down as low as 60,000 again, that would be awesome, but I don't think we're going to get that low. Maybe we will, who knows. But certainly around about the 61 to 62,000 level, I'll be looking to rebuy dips on Bitcoin. We still have 50% of a reasonably sized position on this, so that's okay. If we don't actually turn around and we carry on going up, we've still got a decent chunk on this. This is the way Bitcoin looks. We broke out of this longer term downward sloping channel and then fell back into it, got everyone stopped out, everyone got bearish. We formed a new low. I was listening to, what's his name? The Dutch guy. Perhaps you guys can put it up in the chat. Good day, Jing. Jing, nice to see you. Rotation from stock market to commodities. Yes, absolutely, for sure. We'll talk about that perhaps in the next live stream, but that's a very good point. Rotation is looking like it's likely to occur. So the Dutch guy, what's his name? Joost? Roast? Can't remember. He's got a big following on YouTube, and I was actually invited to a live stream with him at one point, or a collab, and I can't remember his name. One of you will remember. A Dutch guy. Anyway, he calls this a liquidity grab, but he made a bit of a joke about it in his last video, which I just sort of scanned across this morning. Some people call it a false break, a bear trap, liquidity grab, Wyckoff distribution. Doesn't really matter. What it means is we break down through support, make a spike low, reverse, and promptly move back up through support and negate that downward move after having stopped out a whole bunch of traders and everyone got very bearish. We remained long. In fact, we started buying more down on these dips. My last entry was around about 55,000. That trade's still open and just waiting to see what happens now. This is the day chart. So once we broke down through there, got back into the channel, got down below this order block, got everyone bearish. We promptly reversed, got back through the channel, back through the order block, and back through the 20 period, the 200 period, and now the 100 and the 50 period moving averages too. So far it looks good. I'm just taking some profit just in case. It's always good to take some profit, and I'll be looking to buy dips again if we get a chance. Otherwise, I'll just hold what we've got. Nothing on copper. We've talked about copper a few times. You'll notice I've got a few red dots on my charts, and we have a problem with data feeding from Pepperstone onto these charts. You'll see it on a few of the other charts. I'm not sure why. It's not serious. The trading station's working okay. All right, now natural gas. So this is where the problem is. I needed to point this out to you. This is the Pepperstone chart on natural gas, the spot price, and as you can see, this is also not working. It is working on the trading station though. So what I'm going to do is just change this to the Oanda feed in the meantime, and I think it's roughly the same, except all of my dots and lines are not on here from the previous one, but we'll look at the Henry Hub shortly. So there we go. Still trying to base, really. We need to go across to the Henry Hub to see what's really going on. There's the 20 period moving average. Remember, this is Oanda, not Pepperstone. My Pepperstone charts are just temporarily offline, but it's best looked at on the actually, I think this is, which one is this? Oh, this is Black Bull. Okay, this is okay. This is where I trade my futures. This is great. So this is working fine, but I want to show you this on the Henry Hub. So very, very similar. We've got a one down, one up in these last two 4-hour candles here on Black Bull. That's a one down, one up candle. That's generally a bullish reversal candle when it's near the bottom of a move. This is not quite at the bottom, but it's close enough. So I quite kind of like that. That's a pretty regular reversal pattern on natural gas. But what I do want to do is go across to the Henry Hub on the NYMEX, and here it is here. Now this is a bit delayed. It's probably better on Pepperstone actually, on Black Bull. This is a little bit delayed because we haven't seen that little bump up that we've just seen on the Pepperstone chart, on the Black Bull chart. But there's the one down, one up. This is the actual futures on the NYMEX. So what can I say? Well, until we sort of get a move going, and we've been moving sideways for almost 2 days now, until we get a move going, I don't know what's going to happen next. So what I do need to do is clone this and show you where we got in. So that's my last entry. That was 2 days ago now, right at the bottom here. So we're long from there, long from there. Someone said to me, we're long from 2.1 and we're long from 2.11, whatever it was. We're long from 2.25. And someone said on X to me this morning, how could you sustain such a big drawdown from 2.25 to 2.11? And I didn't have a chance to answer that person, but I hopefully they are in this live stream. I don't think so because there are not many people here today. But what I explained is that I don't enter all of my position on the initial entry, and I start to look for additional entries if we drop lower, in this case when we're long. When I'm short, the opposite, of course. I also showed you all of my live positions on the Henry Hub. Where is it now? Don't know why it's not showing on here. Okay. Let's go across to X. I'll show you on there. This is on Black Bull. Okay, fair enough. I don't know. Hopefully you can see this okay. So there are our two positions. This is on the Black Bull chart, not the Henry Hub. So we can have a look at it on the live charts. You can see all the positions that we've taken over the last 6 months or so. Long there, short there. A lot of longs down at these lows when we were below $2. We tried a short there. We tried a couple of shorts here. Those didn't really work. We went long there. We didn't get into I think we did take a short actually at the top here, but not for long enough to be significant. And we've started to buy as we've moved down. So that's where we are at the moment. And we've talked about this extensively in the live stream yesterday, and also in the video that I did yesterday. We talked about natural gas and where we are today. So I'm just going to recap that for you very quickly. On this day chart on the Henry Hub, there's the 61.8% Fibonacci. There's the 100-period moving average. There's a big order block below us right here, around about $2. And I'm not going to rehash everything that we did in yesterday's video because it was quite lengthy. But suffice to say, as long as we hold above here, I remain long. I'll be looking to hedge if we get below, I think around $1.90. But I don't have a full position on this. I'm ready to add some more. I'd prefer to add some more around $2. If we don't get there, then I won't be able to. But I've got a reasonable size position on this at the moment. We'll just have to wait and see. We're also short on WTI, and we're short from these two levels shown on this chart. And for those of you who are trading oil, there's a short there and there's a short there. Both of those are in profit right now. So that's looking okay on WTI. And then we're long on UEC and URA. I'm not going to comment on those right now. And then the Rand pairs, dollar Rand we're short, and pound Rand we're short from the red arrows. And that's that. The VIX is not working on Pepperstone. So I don't know. Let's have a look, see what this is doing on something else. Maybe we can have a look at TVC on the VIX. Yeah, so the VIX has just moved up. We're long on the VIX from that green arrow there. And that's where we are currently. So we're long from about 11, just below $12 or so. It's not really a a dollar number, it's a figure, but let's call it $12. We're now at 13.90. So we've moved up a little bit, but we're not seeing the stock markets move down dramatically just yet. We're starting to see this is trying to get going. NASDAQ, S&P, Nvidia moved down sharply. That's moving down. Apple with this island reversal, and Tesla just down in pre-market as well. And we also see that IWM is down in pre-market. We closed at 224. We're at 223 now. So all looking like the markets will come off a little bit. And maybe we'll get that 15% correction. I'm not sure. That's what I'm hoping for. But if that is the case, then we'll see the VIX begin to tick up. It's already forming this bottom. We've broken out of this triangle. Remember, the VIX is not a trending market. It's basically, and so a lot of these patterns and trend lines, etc., it's kind of irrelevant, really. In fact, I could just remove these trend lines and the patterns and everything else. I just know that once we get down to about 12, VIX is likely to find some basing activity and then spike up into the spikes when we get some volatility increasing. And those increases in volatility normally take place when the market is bearish, when it's falling. So when the market starts to drop, that's why a lot of people are permanent bears on the stock market. When the market starts to drop, it drops with a lot more volatility than when it rallies. And that's why you see these spikes in the VIX. If you go back many, many years on the VIX, you'll see we're about as low and oversold on the VIX and overbought on the markets, as you can imagine. But there is space to go lower. It has been lower in 2018, 17, 18, just before 2018, when we spiked up from a VIX level of about 9. We went all the way up to 50. And in 2019, December 19, going into 2020, actually, we went all the way up from about 10 up to about 85 on the VIX. Now, I'm not saying we're going to get anything like that. I'd be very happy with, 15 or 20 or 25 or 30. But I think we could aim for something reasonable, something, that you'd reasonably expect in a bear market. And that's around about the 25 to 35 region up in this zone over here. So I think we could get up here, 25 to 35. We're currently at 12, 13. And we're long on the VIX, and that will get moving if and when we see a nice dramatic bear market begin to develop in the stock markets. So that's that 10-year yield just dropping off. And I did put a note earlier on the dollar index and just showing that this is now broken support. We'll probably get a retracement back up to retest the support from underneath, and that's at 104.07. We're now at 103.878. So we'll probably get down to this trend line on DXY and then bounce back up into this block, retest the 200 period moving average. That's at about 104.40, and even the 100 period moving average at the top of this block at 104.80. We're currently at 103.80, but I think we'll probably try and bounce off here at 103.50 and move back into that block and then resume the downtrend. My overall picture for the dollar is remains kind of ambivalent, but if anything, slightly bearish. And I think we could see the euro and the pound and the Canadian dollar, Swiss franc, all those currencies, Australian dollar, New Zealand dollar, krona, Norwegian krona, all moving up. So compared to the dollar, let's see what happens. But I do think we need a little bit of a bounce on the dollar. So we should see the euro come back down a wee bit. I know a lot of people are short on the euro. For those of you who are following my acquaintance, Walter, over on X, who's a perma euro bear, you'll be suffering a little bit right now. But I do think there's a good chance, that we'll hold beneath this long-term sloping trend line and move down to retest these moving averages. That's the way it looks on the weekly chart on the euro. So we've got this triangle pattern. It's very beautifully defined, and we're reaching up towards the top of it right now. Once we get there, for those of you looking to sell the euro, who are basically bears on the euro, and I don't blame you for being a euro bear, I don't blame you for being a euro bull either. This looks like a bullish consolidation pattern with the lower slope on this triangle being a little steeper than the downward sloping line. So it's kind of like an ascending wedge or ascending triangle. But I think we'll test the top there, pull back. We could even get back down to the bottom of this wedge shape pattern or triangle pattern. So we could move something like this. I'm going to hazard a drawing with my mouse cursor, something like this. Okay. So we could see something like that on the euro. Certainly an opportunity to sell at this line at about 1.1 or just below 1.0980, 1.0920, something like that. And then a move down, back down to about 1.0750, 1.08 maybe, 0820, and then a move back up through the top. That's the sort of thing I think on the euro as we see the dollar. But I'm really not totally convinced about currencies overall, except I do remain bearish on the dollar yen. But we're going to have a lot more chopping around on this, a lot more bouncing about perhaps required before this carries on moving down. So that's my strategy on currencies. Not too sure about the euro. We could have a little go at shorting the euro, really, if we touch that trend line at the top. And we'll keep a close eye on that. So that would be at around about, if we move up there now, about 109.80. And that would coincide nicely with my 80s and my 20s. So if you're a euro bear, that might be an area to look at for you. And then moving down towards maybe just the moving averages, actually, back to 108, maybe something like that. So maybe a 1% retracement and then a continuation of the move. That's what I think at the moment. I'm not convinced about it at all. That's it, folks. All right, let's see how many people are here. Please post your questions up if you've got any. I'm going to give away 5 free memberships right now. Let's see if I can do that. It will automatically allocate these to you. And I don't know what criteria YouTube uses. It's got nothing to do with me, but here they go. So welcome to all of you, new members. Let's see what happens. Right, welcome Marcin. And this too shall pass yet again. And Veteran Coyote and Joker 4754. That's 1, 2, 3. 1, 2, 3. And Mol. And Mol Far. Pleasure, Marcin. It's great to have you. Thank you very much for joining me, guys. It's 14:30 now, which means that I'm going to be wrapping this up unless there are any other questions. I'm going to go through the questions now. And good luck to everyone. It's been a fantastic trading week so far. I'm very happy that it's all moved and changed direction. I was a little bit worried about the dollar yen, not too much, but a little bit worried. A little worried about gold. I wasn't sure if we were going to form a head and shoulders and move lower, but we moved up, leaving me trapped with a very small short position as a hedge. But that's okay. And I wasn't sure about the stock markets either. I mean, everyone's been incredibly bullish and they've just been moving higher and higher and higher. But that's the time when most people are piling in and getting along on the markets. So, and that often causes a reversal to take place. And it's always very unexpected when the market is the most bullish, when you hear the most bullish comments going on, everyone's optimistic. There's a great deal of FOMO and absence of FUD. That's what happens. And then everyone kind of gets bullish. There's no reason to be bearish. Everyone's optimistic. And then the market pulls the rug out from underneath everyone. That's often what happens. And it's normally the retail traders that lose out. All right. So let me go through some of the questions. Good day, Damajan. Nice to see you, mate. Or ma'am. I'm not sure if you're how you identify. BTC guy Lawson. No, it's not the Lawson guy. Boring Channel. Welcome to you too. That's Tom Hogarth. That's who I'm referring to. And I don't know Tom. I've seen him around. I think he has invited me to. In fact, I know he's invited me to join one of his streams or join him for a collab. But I don't know Tom. But he was talking about prices dropping through support and then reversing once having taken out that support level. Whether you want to call it a bear trap or liquidity grab or just a messy move, whatever you want to call it. He was joking about that on his live stream. G'day, Damajan from Germany. It's great to see you. Germany's economy needs a new government. Trump in the US, peace in Ukraine, and normal cooperation with Russia. I think that's where we're heading. I think we're going to see the end of these wars. I said this In fact, I wouldn't be surprised if they ended before the elections. I thought probably by August or September, we would see an end to the Ukraine situation, into the Israel situation, a ramping up for Trump, changes in energy market, rotation out of perhaps stocks right now into maybe commodities, energy, metals, Bitcoin even, that sort of thing. So we're going to see quite a lot of changes, I think, going on. But Germany's economy certainly does need a shot in the arm. Good day, Can. Will banks keep going if interest rates come down? Well, Can, I don't trade bank stocks a lot myself. In fact, very rarely, but I do observe them. And in my opinion, when the interest rates are high, the banks sort of and lending companies it's a little bit of market gouging going on, really. And I think that you end up paying more, consumers end up paying more than just the extra interest rates, and that the banks build in extra profits, and they're able to fudge and hide and mask streams of income. It all gets a bit messy and cloudy, but I think the banks generally profit a lot more when interest rates are higher. And that's common sense also, obviously. When interest rates drop, I think banks initially come off a little bit, and then we need the fresh rounds of lending to come in when people can afford to borrow more money at lower interest rates. That's when the credit cycle begins to reboost itself again. So lower interest rates, a pick up in lending, but that takes time. It probably takes 6 months to a year. So I think we'll see the banks come off a bit, the lending companies, credit card companies, and a bit of a dip, and then those will pick up as lending begins to resume again. And people have to pay off their credit cards. People can't borrow more when interest rates on credit cards are at 20% or whatever they are. They can't even pay them off right now. So they've got to pay them off first. Go to debt counseling, whatever needs to be done. There's a lot of people like that. Borrow to the hilt and they can't afford it. They can't borrow more money. And the banks will suffer as a result of that. And also when the interest rates come down, just take yourself, for example, and myself. I don't borrow money. I never spend money on credit ever. But not even cell phones and things like that. I don't borrow money for those. But if I was borrowing money and I was hocked to the hilt with, let's say, 30 grand of debt right now at 20% interest, and I wasn't able to afford to pay that back, which many people are not, and they are in that situation, it'll be a long time before they can re-borrow more money and at lower interest rates. So I think that's the sort of cycle that we're entering into now. You just got to put your own self into those sort of collective shoes and think about things like what you're spending your money on, how much you have to, what's your credit card expenditure, what you're saving or not saving, how much it costs to go out for a Big Mac, let alone a decent meal at a good restaurant. $50, $100 more, $200, So restaurants are suffering as well, as you know, if you're in the US and all around the world. So I think we're entering a really tough time. I think we haven't seen the worst of it just yet, and I think we're going to see a lot more difficulty creeping in. And I think the banks will also struggle a little bit with that. Ralph, welcome to you, Ralph. 2 interest rate cuts are priced in. Look at the Fed Watch tool. Okay, I trust the Fed Watch tool more than I trust what's going on in mainstream media. 2 interest rates, so that would be September. We can have a look at that actually if you want to. I'm just cognizant of time here, but let's have a quick look at that. Where's my Fed Watch tool? So Donald Trump is saying to, apparently, I don't know, I haven't verified this, but apparently he's saying to Jerome Powell that he may not cut interest rates until the election is completed, or until next year, basically. So here we go. This is the July meeting. A 4.7% chance of a cut. And then in September, we've got a 95% chance of a, hang on, let me just check. 5/25, what date is that? Yeah. All right, so the current rate, I've forgotten how to read this now. 31st of July, the probability is 95% that we won't cut. Okay, that's 31st of July, 95% probability of no change. So that's in 2 weeks' time. Then the 18th of September, which is the next meeting, there's a 95% chance that they will cut, despite what Donald Trump is saying. So we should be at least one cut by September. And then the next one is in November, August, September, October, November, not quite 2 months later, but a month and a half. And there's even a chance of another cut, but it's only 56%. That's a little bit iffy. I'm not sure if we'll get that one or if we'll just get one cut. I don't know. And then if we go to December, the last one of the year, there's a 40% chance will be, or 50% chance we'll have had yet another cut. I think 450 to 475. Let's just compare that. Yeah. So a chance of another cut. So potentially even 3 cuts before the end of the year. And then the final so that was the final meeting, 18th of December. And then the next one's in January, 29th of January. So quite a big gap. But in 2 weeks' time, we are expected to see no cuts whatsoever, 95%. Anything above 80%, and the chance of a cut is pretty slender. So that's the way that is. Let's go back to the charts, see what's going on. So folks, just I would like you to tell me if you like this more relaxed chat, casual discussion format in the live streams, rather than, and I'd really like you to put this up in the comments if you wouldn't mind, rather than, and I will obviously continue to do the pre-recorded videos, the formal videos, but I think these live streams are more interesting and they're more interactive, and you get to ask questions and it feels just a bit more like a community. I'd love to hear your thoughts on that in the chat right now. And if you're not subscribed to this channel, and the other thing I want to ask you, if you don't mind, let's have a look at this. I want to show you something. I'm just going to be very chilled and very calm and very relaxed about everything here. If you have a look here on my YouTube channel homepage, you're able to subscribe if you go to this page. You can see there they were at 8,980 subscribers. It's actually 8988 currently. Okay, we have a problem. All right, sorry about the delay. I'm just having a little problem here. I think it might be the RAM on this video recording setup destroys the RAM or use a lot of RAM. You'll see we're at 898 on subscribers. I'd really like your help to get to 9,000. We're only about, I don't know, 100 subscribers away, just about, 899. Maybe, actually, it could be even closer than that. I think we're about 10 subscribers away, 899. We're just about there now. If you could help me to get to 9,000 subscribers, I'll commit to do one thing for you, and that's do more regular live streams. So I'll do a live stream 3 times a week. How about that? And then we can get this community moving, we can get closer together, and we can do better stuff, and we can do better analyses. But in order to do that, I'm going to make a deal with you. If you just subscribe to the channel, if we can get to 899, 9,000 subscribers, I think that's a fairly good milestone. And then if you do that for me, I will do more live streams. How about that? All right. The boring channel. Well, the US got nothing done whilst Trump was president. We went backwards, funding coal as an example. Past few years, we did CHIPS Act to build high-tech computer chips. Infrastructure bill will be passed. Infrastructure bill passed. Yeah, so my feeling about the US is generally fairly optimistic, and there's a couple of reasons for it. One is because I'm optimistic and pessimistic from two different perspectives. One is I think there's going to be a lot more money printing, and it's going to be overall it's going to be pretty negative for the world economy in general. However, I think in the short term there will be a boost. But what I do like is the people that Donald Trump, if he is elected, which he may not be, of course, has surrounded himself with, and you may or may not like them, but they are very intelligent people. People like Vivek and J.D. Vance, highly intelligent, or Vance, depending on your accent. Vivek Ramaswamy and Elon Musk, people like that. So these are sort of technical people, engineering people, IT people, financial people, and they have very, very high IQs. And I think they'll bring some guidance, moderation, and sensibility to the White House through their advisory roles, whatever those might be. Whether you like Trump or you like those people that I mentioned, doesn't really matter. We're going to keep this to finance and trading, but I think I think generally it's a pretty strong team, and I think economically it's going to be, in the short term at least, good for the country and good for the world economy. All right. Yeah, so Steve, you never know what conversation. You're right. So we're just chatting, really. I've got nothing pre-prepared, and what I do like to do actually is just chat and keep the charts on the screen. We can watch things as they occur. Keep an eye on stuff here, and I like this format. And as long as there are no expectations from the viewers that it's going to be, structured and formatted in a certain way, that it's going to be free flowing, that it's going to be perfectly scripted, that everything is going to be on cue and on time, all of those sorts of things. If that's what you're expecting, this won't work for you. But if you allow me the freedom just to be casual and chat away, I think it's better, and I think we can. I think it's more enjoyable in general, really, and of course you get to ask your questions. So, and I think I'm rambling a little bit now. So, Ralph, you say this is a top format, James. Where are the questions, guys? Yeah, ask the questions. Yeah. So, Mr. Taggy, your question is a good one. With interest rates potentially coming down, is the Russell 2000 worth looking at for a rally? Yeah, I think so. I think we're going to get a pullback across the. So we looked at IWM, for example, and I think we're going to get a pullback across the field here, probably. Everything's too overextended right now, including small caps, including the Dow, including the S&P, including the NASDAQ, and a few other things, including actually Bitcoin and gold. We've taken some profit on that already. But the small caps, I think, could do with a bit of a pullback and then a continuation of the rally, particularly when interest rates come down. But I think about a month or two after that, we're going to see a general headwind into the stock markets overall, and we'll see a correction. Normally, you get a little bit of a bump when interest rates come down, if they do come down this year, a little bit of a bump in the markets, and then a month or two later, we normally see a big correction. So, and that's not cast in concrete, set in stone. The timing is not perfectly clear, but generally that's the idea. A little bit of a bump leading when interest rates start, interest rate cuts start, and then a fairly significant, fairly severe correction in the markets thereafter. Because normally the markets, the reason the Fed drops interest rates is not because they want the markets to drop or because they like you very much or because they want to help your pocketbook or your budget. It's because generally because the economy is in trouble, because they've purposefully destroyed the economy through high interest rates. That's their job. That's what they've done already now. And although we haven't seen complete destruction of the economy just yet, I think we're going to see some headwinds, some pretty severe, gusty, gaily headwinds coming up. All right. XLF continues to grow strongly. Uranium is becoming increasingly important for power plants yet to be built. What do I think about that? From Ralph. Yeah, so Ralph, I'm long on uranium. I've been long for a long time on uranium, and I think uranium's awesome. I think we're going to get pocket uranium reactors in cars and aeroplanes and ships. I think the uranium nuclear technology is only nascent. It's only just beginning, only just starting. I think there's a lot more that can be done with this. And I don't think there's enough green energy to power this planet, alternative energy. There might be eventually. But I think uranium, plutonium, molybdenum, and all the other ones that they use for nuclear fuel, quite a lot of them. My chemistry is a bit rusty now, but yeah, I think it's good. I think we're going to see a continuation in these rallies. We're long right from down here on UEC and still holding this. So we were long earlier. We've been buying this for months now, if not years, and we've taken profit, rebought, taken profit, rebought. That was our last entry, and we haven't done anything with that since then. Same with that's UEC. Same with URA. This is the channel that we're trading in. That's when everyone got long, if you remember. Actually, on 2 or 3 occasions, everyone went ballistic on uranium. Look at all those gaps. I mean, look at this. This is when everyone was so bullish, and there's so much FOMO and FUD, not FUD, just FOMO, to the moon, TTM. All of that was going on here. And then they realized, well, actually, we're going to have a bit of a correction, which we did, quite a massive correction from 33 down to, I don't know, 27. That's 6. That's a, I don't know, 20% correction. And then we've been going sideways since then. So our long positions are these two green arrows, and I'm still holding those. I'll be looking to add more. There's the 200 period moving average holding up above there. There's the channel bottom. We haven't broken through this channel bottom for a long time, so it's probably due a little bit of a break, probably. So we may have to get down to this green line here and into this order block. These channels don't last this long. Actually, this is a very bad channel, by the way. Let me just redraw this because I'm not happy with the way I've drawn that at all. I haven't updated it in some time. And I think we could actually twist it around a little bit. Something like that. Let's draw this a bit better so we get more accurate. All right, that's a bit better. Yeah, let's go with that. So we'll go with that new channel. All right, so we've got quite a long channel here. Although we haven't had many touch points, it's not very neat, or it's a messy old channel. It's not really a proper channel, actually. We should probably just ignore this. But if you are looking at this channel, it's quite possible and even likely that we'll have to break through this channel, get some of these longs, clear out a bit more, get down below the 200 MA, back into this order block. But I think as long as we're above about 27, 26.5, 27, these recent lows, we should be okay. I wouldn't be surprised if we did pull back a bit though, and just do what we did at the top here. When we rushed through that trend line, the original trend that I had drawn in, when we pushed through there, everyone got bullish, everyone got weird, everyone got FOMO, and we went through the channel line and we came back down, back into the channel. And I think, and we've seen that a lot on many instruments recently, and I think we could see that again on URA. So we had it at the top. Can we get that at the bottom, a dip but down below there? And as Tom Hogarth said, pick up some liquidity, form a bear trap, frustrate people, create a mess, whatever you want to call it, and then rally up from there. So yeah, generally I'm pretty bullish on uranium, and I think we're going to see some really exciting and interesting technology coming out of the uranium and nuclear fuel sector. So that's looking good. Whilst we're on this page, we're still watching natural gas. There it is, just poking up again on the 4 hour on Oanda, and we have roughly the same price on, let's have a look to see if we can get that chart back up on Pepperstone. if it's working. Otherwise, we'll just go back. Oh, there we go. Pepperstone's working. Hurrah. Hurrah, hurrah. So there we go. We can look at a proper chart now. There's our entry positions. One there, one there. That's where the price is. Trying to push up. Lots of reversal candles. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 4-hour candles. That's 44, call it 48 hours, 2 days of just moving across the page in a minute, tiny band. Bollinger Bands are squeezing. What other volatility indicators do you guys use? I don't really use them, but you'll see a squeeze in the Bollinger Bands and a general volatility reduction right now after moving sideways for so long on the short-term charts. In fact, what I can do whilst we're here is put on a Bollinger Band for you. Now, a Bollinger Band, for those of you who don't know what a Bollinger Band is, it's a very simple indicator created by a man called John Bollinger, who lives in, I think, Newport, something like that. We've got the 20-period Bollinger Band on here with 2 standard deviations, as you can see. Now, what we see on this, I'll come back to that. What you see on this chart is this very thin red line and this thin green line at the bottom here. We're at the bottom, the green line's below us, the red line's above us. And what this is actually measuring is that level there, the top red line and the green bottom line, are 2 standard deviations away from the average. The average price in this case is the 20-period moving average. So we're looking at the 20 periods, 24-hour candles, and the Bollinger Bands, the top red line and the bottom green line, are defined by 2 standard deviations away from the mean. Now, this is a statistical term which is used to measure variation in a Gaussian curve. Most curves aren't Gaussian, and most things do not adhere to normal distributions in mathematics. Often you get skewed distributions, you get multiple distributions with double tops and double bottoms, all sorts of things. We never get a normal Gaussian distribution, or very seldom. Nothing perfect in any case. So these Bollinger Bands are inherently flawed in that sense, but they do give you a measure of volatility, and they do give you the extensions where you could expect a turnaround. Now, in order to see that squeeze, we'd have to go down to, let's say, a 7-period Bollinger Band, and you'll see that these Bollinger Bands have now squeezed right in. Let me zoom in, and that's what's called a Bollinger Band squeeze. This one candle has touched both the bottom and the top Bollinger Band. That's when you know that the squeeze is for real. So one candle straddles the entire distance between the top and the bottom Bollinger Band. That's how close they are. They've come right together like that. It's a Bollinger Band squeeze. And the first move that this produces will normally break out through one way or the other. We don't know which way just yet, but it will probably continue in that direction when it gets through and closes outside that Bollinger Band. So if you don't know what a Bollinger Band is, apart from what I've just told you, go and Google it. You can look on Investopedia. It's a good source, and find out what Bollinger Bands are. And if you want to know the mathematics behind Bollinger Bands, you'll have to read up some Statistics 101 and find out what a Gaussian distribution or normal distribution is, what standard deviations are, how they measure volatility, and how they measure the opportunities really for mean reversion trading, which is something I don't do, but mean reversion traders will use moving averages and Bollinger Bands to define the extremities of their trades. All right. Right, good day, Roby. I'm not sure it's meant to be Roby or Robbie, but I'll go with Roby as it's spelt. And the question is, do you think we can fill the 1.9 gap on natural gas? Yes, I do think we could do that, Roby, for sure. We talked about this in yesterday's live stream, and I'd encourage you to have a look at yesterday's live stream or the video. There's the 1.9 gap that you're referring to. I think it's more likely that if we do head down there, we might not, remember it's a rollover gap, so it's not a trading or a weekend gap. It's not a real gap, but there was no trading in that zone. So it is a vacuum, a liquidity vacuum because of that. But often the top or the bottom of the gap will also act as support and resistance. And I think we could actually reach the top of the gap and bounce off there without filling the gap, or we may not get down there at all, or we may have to fill the gap, which would take us as low as 1.84837 to be precise. I don't think that's the most likely scenario, and I'm hoping we'll hold here, or at the very least at around about the $2 level, which is where this gray purple zone is drawn in on this chart. That's what I expect, but I'm not predicting that. It's not a forecast. It's what I think is more likely to happen than the other scenario of a much larger drop. Ralph, you say inflation in the UK is at 2%. In Germany, you can add 2%. Ralph, I don't know. The inflation numbers, I think you can go and look at real... I don't know if there's a similar site to, I think it's called Real Inflation, and there's a website for the US. There might be one for England. Remember, we were at over 10%. I think we got as high as 12 or 13% at one point in the UK. So all of your prices have gone up by at least 20 or 30% in the last year or two, and they're not going to come down. So it doesn't really matter what happens next in terms of inflation from the consumer point of view. But obviously, even if it just prices stop going up, it's going to take you 10 or 15 years to get a 30% increase on your salary if you're a salaried person. So pretty tough. I don't know what the real number is. I have no idea. I don't believe any of the numbers that they put out ever at all. NK, I'm not going to recap natural gas. N1KZY, thank you for joining us, but I'm not going to recap natural gas. I'm just about to finish, but you can rewind this video and check it out. Roby. Good. So it is Roby and not Robbie. So there we go. Thank you very much for your question. Now, let's quickly look at what's going on in currencies. Euro moving up. Remember, we looked at the level at this trend line on the euro. If you're looking to sell euro, somewhere up at that trend line. Just to remind you, I know a lot of you trade euro. I haven't been trading euro. I normally trade euro a lot, but I haven't been trading it recently. As you can see, for the last almost a year, we've been going literally sideways across the page. And unless you're I don't know. I mean, I don't see any good probability trades in here, except for at these trend lines. So if we did get up to 1.0980, I'll probably consider selling euros there for a move, but back down to the bottom, down to this lower trend line at 1.07-ish. So 0980 down to 1.07 or 0720. So maybe there's a 200 pip move out of that available. Possibly, probably, in fact, even. So that's what I'll be looking at on euro. Dollar yen, looking for a bounce back up on the euro yen, dollar yen to sell more into. We're still short on that though, and still got a reasonably sized position on it. Short on NASDAQ, S&P, Apple, big island gap producing itself right now. We're already down at 230 on Apple, so big move down. Big, massive move down in NVIDIA. We're short already. It's the problem with gaps down over weekends and overnight is that if you're not already short, you're going to miss out. So luckily we are short already. We're also short on IWM, and that's also got a big gap down. So we, once again, lucky to be in that already, although it's more or less at our entry price at the moment. But massive gap down in pre-market. None of these markets are open for me at the moment. And then Tesla, a little bit of a gap down, but not much. And then we're looking at metals, Bitcoin. As I said, we took up some profit on Bitcoin at about 65.5. I'll be looking to add down at some of these moving averages, or ideally back down at about 60 or 61. I don't think we'll get that low though. And then NatGas, let's see how this 4-hour candle goes. Just moving down, bumping around until we break out of this range, until we get that Bollinger Band squeeze. So the Bollinger Band squeeze, as you saw, it's like a pincer. So it comes in like a pincer like that around the price. And as the price starts moving and volatility picks up, that pincer inverses and turns into, I suppose, a convex shape and starts projecting outwards. So when we see that, we'll know what's happening with natural gas. At the moment, we're just going Bollinger to Bollinger within this very, very tight range, but we'll keep an eye on that. And then VIX, as I said, well, that's ticking up. Actually, suddenly, it's gone up a little bit while we've been talking. We're long on the VIX from down there. So maybe we can get up to 25 on the VIX and get a sudden profit. on that. And then someone has been asking about wheat. So these are all the commodities that I'm trading. I do end of day trades on these. We only have a position on sugar from down there at the moment. We've got nothing on all the rest. I'm looking to sell into orange juice, show you what I've got in mind very quickly. So we're long on sugar. Cocoa, I'm looking to sell into, looking for this sort of pattern. It's moved down prematurely without us, so I don't think we're going to get that path after all. But still, we've got this triangle that we've got to resolve, and I think we're going to break down through the bottom. But I'd like to see a rally back up to this 618 fib in order to get short at around 10,000. We're not, it seems to me like we're not going to get there. We may miss out. In that case, we'll have to wait for a breakdown through the channel and maybe through these lows here, a retracement back up to that level, maybe something like this. I'm just going to move this down, something like that. So breakdown, a retrace, so breakdown, retracement back to the underside of this trend line, triangle pattern line, and then a resumption of the move down. But until that happens, what we want is something like this. But I don't think maybe we could get there. Look, maybe we'll follow this precise path and just dip down to this trend line and then rally sharply back up from there. That would be perfect. So that's what I'm watching for on cocoa. These are all end of day charts. I'm also looking for this on orange juice. I'm not sure if we'll get this, but that's the sort of path I'm looking for on orange juice. Also note, up to the 786 fib I'm hoping for. As you saw on cocoa, I'm looking for a move up to, let me just show you this quickly, looking for a move up to the 618 because the 786 is already outside of the sloping trend line. If we get above that trend line on cocoa, I'm not interested in shorting at the 786. Particularly, I'd rather short at the 618, but when we come to orange juice, and we also might have missed out on this one, I'd rather sell at the 78.6, look for a Wyckoff distribution, a break through there, a new high, and then a collapse. So that's what I'm looking for in orange juice. All of these commodities, these are the softs and the grains. I'll be looking to trade these at the end of every day, and I'll be sending these alerts out to my members as well. We've already got a position on sugar. I forgot what I was going to say, but I've remembered now, and it's about wheat. Someone asked me about wheat, and I'm just going to have a look at this quickly. And I did put a chart up. In fact, I'm going to switch to let's switch to the browser because I did put this up in X. Is that showing? Yeah. Yeah, so here's my chart on wheat. So this is, I don't have any positions on this. This is a weekly chart on wheat, and I'm only putting this up because someone asked. So you can see this is Oanda, weekly chart on wheat. And this is the sort of thing that I think could happen. And it's difficult to see here because we've now, actually, I'm going to try and get this back on the live charts. We'll do that shortly. We've broken down through this support level. You can't really see it properly here, unless maybe if I do this, there we go, you can. Oh, hang on. So we've broken down, I'm zooming in using my mouse pad. So we've broken down through that support. That's pretty bearish, and unless we sort of bounce up through there and that's a fake false break, I don't know. This is the sort of path I'm thinking on wheat. I think we could get down to that's $5 per bushel. We could get down as far as $4 per bushel. I'm looking and waiting for a clear reversal pattern on this before deciding to do anything on wheat. But just bear in mind, if you are long on wheat, we have broken down there. We can have a look at that quickly on the actual chart. That was the Oanda chart. There we go. Let's zoom in on that. Yeah, so we've actually bounced off this level on wheat. This is the weekly, this is the daily chart on wheat. And remember I said we've broken down through the support level, a pretty strong support level, multiple touches, 1, 2, 3. and this was the fourth touch. You'd expect on the fourth touch that we'd break down and carry on. Once you get past 2 touches, the third becomes a little bit tricky, less likely to bounce up. We did in this case, only by the skin of its teeth, really, by the looks of it. Managed to get a bit of a rally, but not for too long, and then we collapsed back down again. This is the fourth touch of the support level, and you wouldn't expect it to hold on the fourth touch with a high degree of probability. So even though we've bounced a wee bit from there, I don't know. I'll be watching this for later on, a bit later on today maybe, and see how this goes. But generally, I think we could get lower on wheat. I'm not. I think it's a little. Look, I mean, if you want a dollar cost average into this at $5.20, maybe with a 20% position, go for a bit more at $4.80, $4.20, something like that. $5. I don't know. Something you can consider. But I'm not in wheat at the moment. Yeah, Ralph says natural gas runs against the seasonals. Momentum's weak, but the bottom is near. All that's missing is the squeeze spike downwards. Yeah, the squeeze spike downwards would be great. Rotation, yeah, we're talking about rotation. Are we looking for an exhaustion gap for NG and a volume spike? Yeah, possibly, Mr. Z Pepe. Yeah, maybe an exhaustion gap, something like that, and a move down. You'll see it on the 4-hour chart, for sure. You could see it on the 1-hour chart, but an exhaustion gap would look something like we saw there on that weekend gap. That didn't hold. And you'll see it quite frequently on these reversal candles. Like there, we took out the lows, for example. It took out the lows quite significantly. We went from 237 all the way down to 234. So 3-cent spike down and then a surge up after taking out those lows. We saw it again over there to an extent. We saw it over there as well. So you'll often see these little, now you've called it another name, exhaustion gap, or exhaustion move. You could, so liquidity grab, exhaustion move, fake break, bear trap, whatever you want to call it. You do see that quite often on natural gas. So there's another example right there. Holding a low, trying to reverse, moving up, and then a smash down just below that level, and then back up again, and then moving up. So sure, we could definitely see something like that. If we do get down to about $2, I'll be definitely adding some more size onto my position, and that will be my favorite place to buy natural gas, at around just above $2 or just below $2. Steve, how long? Question is, how long would you estimate gold to be at the all-time high of a small short position at 24.50? And I've hedged. I don't expect to maintain. I did not expect to maintain dries like this, Steve. I also didn't expect this move on gold, although luckily we've been long. So, but I'm now hedged, like you are. So I don't know. I'm looking to take the long side of the hedge off and add to the short side at some point. But I haven't seen any reason to do that just yet. I'll be looking for, we were talking about exhaustion moves just now, maybe a big massive spike high on gold on the 4-hour chart, and then a move down. Something like that maybe. There's an example of that, something like this. We've got a similar pattern currently at the moment to this little conglomeration here. Let's draw a, that's not even a word, conglomeration. Let's draw let's draw a fractal and fit it to where we are right now. So, could we see something like that? I think that's your question. Yeah, for sure. I think I like this. So if we can get up to 2490, just below 25, 2.5, I think we won't get above 2.5 easily. But if we get up to just below 2.5, or maybe just above 2.5, 2.520, 2.480, 2.5, 2.490, 2.510, any of those numbers, and that would be this sort of spike high and then a bit of a move down. So we've seen that quite recently over there. We've seen it over here as well, actually. So gold is prone to do this sort of thing. You get these sudden drops and then the incremental move higher, sudden drops. And we also do get a lot of triple tops and double tops on gold. And right now, although it's not a triple top, it's interesting. because it's kind of like an expanding pattern. Let me try and draw this for you. Yeah, it's a flat bottom. This is actually a real tool on TradingView. Don't know quite how it works. Something like this. Not sure. No, it wasn't meant to be a rectangle. Let's try this one. So something like this. Okay, I'm going to give up shortly. Oh, there we go. No, that's not going to work. Anyway, we've got a flat bottom and okay, I'll give up. We've got a flat bottom and a rising top. So it's a sort of a half rising pattern, expanding pattern, which is potentially bearish, and a reversal pattern, but we're not seeing anything pretty. I don't know. I'm a little bit scared to take the shorts off. We could see a mass because of interest rate cuts coming up potentially. There could be a surprise interest rate cut that's already priced in, or that's about to be priced in, or that people have leaked the story about, that could force gold to carry on rallying dramatically. The moment they cut interest rates, gold will rally, and that, you know, if there is a leak or something like that, or if there's a surprise cut in a few days' time, we could see gold just carry on, or we could just see it stay at this current level and waiting to see what happens with interest rates this coming FOMC meeting. So I don't know. I'm a little bit reticent to unhedge at the moment, but I'm happy just to leave it like that. I earn interest on my overnights from the shorts, and I lose interest on the overnights on the longs, but they balance each other out more or less. So there's no rush to do anything. English Practice Club, welcome to you. When you say you've hedged the position, does that mean you're long and short on CFDs, or long cash market position and short CFDs? Okay, so English Practice Club, I'm assuming that's soccer or football. So I just trade the exact same instrument in the opposite direction. I'm able to do that because I'm not in the US. The US brokers generally are restricted in the amount of hedging, if any, that you can do. But what you can do is have an account, another account, even with the same broker, and trade the same thing in the opposite direction on a different account. That's one way of getting around it. Or you could just exit your position and stay in cash, like you mentioned. Sometimes I do that. I'll take my positions off and rebuy dips in this case, if it's gold, for example, take my positions off and rebuy dips. That's a kind of a hedge in a way. I'm hedging my bets in that I think it'll drop and give me a better opportunity to buy at a cheaper price. It's a kind of a hedged bet, but I normally hedge by just taking an opposite position of equal or a smaller or larger size, depending on the situation that we're in, and then reversing those hedges when we've moved in the opposite direction to the main trade. It's a tricky thing to teach, hedging, and I'm going to be covering hedging in my next new trading course. Not next, done a few trading courses in the past, but we've got a brand new one coming up, and I will cover hedging in there. It's a really important part of what I do as a trader, and it's integral to the way I trade, and it's integral to the way many institutions and bank traders also trade. There's a lot of hedging that goes on, and it's not only with cash and spots and CFDs and futures, but it's also with options. I don't trade options myself, mostly. Joachim, welcome to you. Joachim Scott. I love your videos, James, and I know that you are a professional. How profitable is your annual trading returns? Okay, Joachim, that's a kind of I'm just reading the other questions here. That's kind of a tricky question because it's a private matter. However, and also if I publish my returns, my clients know my returns, obviously, and my private group members kind of know what's going on because they see every single trade I take. So But when it comes to the general public and advertising or explaining or proclaiming my results, there are all sorts of rules and regulations about that for a start. All sorts of trouble you can get into with the CFTC and the SEC and the FTC and all the other bodies around the world. So one doesn't want to proclaim results, but I'll tell you what I aim for, and that's over 100% per annum. So and that's sort of my base. That's my sort of base case. So so it's roughly about 7 to 8% per month compounded, and that might sound like a lot to you, or it might sound like very little to you. Some of the best traders in the world, and I know what good hedge funds, good traders, professional traders, private traders, those who trade for banks and funds, those who trade for themselves. I know kind of what people are achieving in the markets. And I can tell you, for someone that trades on volume, anything over around 100% per annum is kind of top tier, top notch, top level. And so that's why I don't really like stating that, but that's what I aim for as a base level. Anything over and above that, I consider to be a bonus, and anything below that, I consider to be poor performance. So, having said all of that, this last 6 months haven't been great for me. They have been pretty poor. One of the main reasons is because of this prolonged rally in the stock market. I haven't lost a lot of money on stocks at all. In fact, we've generally made money on it. I've had a long period of holding, which has prevented me from taking other positions and adding volume to other and size to other positions that I'd like to be in. But holding short dollar yen trades for a long period, eroding profits because of the overnight carry, and also tying up capital, which I could have used elsewhere more profitably. Now that we've moved into profit on the dollar yen, it all looks hunky-dory and I'm pretty happy about it. But it was unnecessary for me to hold that trade for so long. And I just didn't think it was going to carry on moving up above the last intervention level. I was wrong on that. And as a result, it tied up some of my capital and I paid overnight costs. Now that we're in profit, I can look back and say, I think that was a great trade, but actually it wasn't. I would be kidding myself and kidding you. It wasn't the best of my trades, but it's all worked out quite nicely. So about 100% per annum is my target. And as I said, anything below that I consider to be poor performance. Anything above that I consider to be a bonus. If you compound at 6, 7, 8% per annum per month, just compound it. Don't take your profits out and add to that month by month and let that money grow and compound in your account. You will get to 100% per annum at 6, 7, 8% per month compounded. So when you break it down to a monthly target, 6, 7, 8%, it doesn't sound all that unachievable. When you say 100%, you want to double your money every year, that sounds unachievable. But that's what I aim for. Boring channel. I don't use VWAP. I probably should, but I haven't. I don't trade with VWAP. I'm very familiar with it, but I generally don't put much on my charts, as you know. Okay, it's a pleasure, Joachim. So yeah, that's the deal on targets. So I think as a beginning trader, if you're starting out, something around, if you can achieve 5% per month, you're doing really, really, really well. If you're starting out, or even if you've just been trading for a few months or years, if you can consistently achieve 5% per month, I think you're doing fantastically well. And if you can just increase that a little bit to 6, 7, 8% per month, you're at 100% per annum, which is a fantastic result. Top hedge funds, top traders, that's the sort of target they'd be looking for. Even slightly less than that, in fact. Okay, folks, my family has arrived back from the beach, so there's going to be noise and chaos. So I'm going to have to leave you. Have a great trading day. It's been a fantastic trading week so far. It's hump day today. If you haven't subscribed, I'd really appreciate your subscription. Try and help us get to 9,000 subscribers now, today. All you got to do is press that button. It doesn't cost anything. Hit subscribe, and we'll get to 9,000. And I promise in return, if we get to 9,000 today, I will do 3 live streams a week. And it's all free of charge. So there you go. Okay, folks.